Hey, welcome. This is what I'm calling the complete beginner's guide to a trend trading system. I've been wanting to do this for quite some time, and the reason why I'm doing this now is because we, despite what mainstream media and social media is saying, there is no asteroid coming for planet Earth. We really are high probabilities of a bull run. If you're into this, and if you're ready, and if this is the right time for you, get ready to learn technical analysis foundations you need to make better investment decisions. Learning how to build and read a chart is at the core of this 4-week online course. And in my opinion, this is the number one key missing link in all of financial education. And it starts right here, and that is how to build and read a chart. 6 outcomes that you will learn by going through this 4-week course. Number 1, you will easily be able to understand the direction of the trend. Number 2, entries and exits. This could not be easier with this trend trading system. You will know precisely in terms of what to look for. And before I forget, this is for swing traders. This means that for those that are interested in bigger time frames and bigger profits, you will be in a trade in some cases for weeks, and in other cases months. And conversely, when it's time to sell, be on the sidelines in cash, you'll be in cash for weeks and months. But I can guarantee you this, with this trend trading system, you'll never, if you do this properly, you'll never be hit or stuck in those big, massive corrections that Bitcoin and cryptos quite often do. So, number 3, patience. I had to include this. Number 4, once you feel like you are ready to put your learnings to test, paper trading. This is a great way to gamify what you have learned and put it to use. The tech stack. I actually think this is going to be the most difficult part of training, especially if you are new. And then lastly, I'm calling this the mindset. It's a surfer's mindset. So you're going to pick up on a little bit of surfing. There's a theme sprinkled throughout this material, but that's by design and primarily because surfers, that mindset, there is a direct correlation of how surfers think. And there's some best practices in there for traders. But this is also a wonderful way to think about probabilities versus what's possible. All right, so if you're ready, let's dig in. So real quick about me. Number 1, IBM blockchain. So dating back to 2015, I led a sector for North America. I was one of the very first few members of the blockchain team. I had quite a bit of offerings that I was responsible, and blockchain was one of those. In addition, I was also the delegation holder or the lead negotiator for all of our large deals. So why am I mentioning that? Because I was personally witnessing the first phase of the large companies getting blockchained up, starting back in 2014 when I decided to go all in on blockchain because I knew that this was going to transform every single sector and potentially every single industry. I knew that in this decade that we are now in, it would be center stage. Fast forward about 8 years, and it's quietly becoming a household name in terms of technology. Number 2, and this is very relevant, I'm also a former co-founder of a Bitcoin and Ethereum hedge fund. During my time there, I was on the architect team for the overall trend trading system. So I was an integral part of creating the trend trading system. And a big component of that trend trading system is in this 4-week online course. Number 3, I've been invited by MIT. I've been a panelist for them, and I've had the opportunity to talk about all things blockchain. Number 4, pay it forward. So for several personal reasons, my mission is to help others successfully navigate through this decade, or what some are calling the biggest transformation of wealth ever. This is the fourth industrial revolution, which I talk about here in a few minutes. So before we dig in, I had to mention this: investing in the future, navigating the world of ESG. So why am I talking about this real quick? This reminds me of the dot-com era when I was first starting out my career in tech sales. I was literally in the thick of the dot-com era. There was money all over the place. I was surrounded by millionaires. But one key thing is I had no idea how to invest in anything. I was so green and I was so envious. So I wanted to share this with you. I talk more about ESG later in this video if you're not familiar with it and the opportunity around ESG in this fourth industrial revolution. But what some are saying that this is the biggest transformation of wealth ever. There's literally, yes, there's money creation, but money is literally moving right before our eyes and your eyes. Most people don't even see it happening. Please take ESG serious because I'm going to touch on this again here later in the video, but this is massive. And I'll give you a little hint. By the year 2025, one third or one out of every three assets under management globally are going to be ESG related. So I do not want you to miss that. So here is the table of contents. I don't know if I mentioned this, but this document, this PowerPoint that I am sharing, this will be embedded in the notes section. So this is yours, free of charge. So feel free to download this at your convenience or whenever you would like. But here's the table of contents. So I won't read all of these, but you can see. So we've got the ship and the jet ski, which you will see. We talk about the speedometers. We talk about candlesticks, set it, forget it. You can see there's just a ton of intel in here that I am sharing with you. And you can see right here, here's a surfer's mentality. This is a short 1 minute and 40-second video that I put together in terms of the correlation between traders and surfers. Talk a little bit about risk management, talk about trading view. This is part of the tech stack. And then on the last portion of this is where I dedicate a few minutes around this fourth industrial revolution and this whole ESG massive movement. So you can see there is quite a bit of information. And also, lastly, the DXY, the dollar. Stay at least until I talk about the DXY. There's a correlation, causation with the DXY in Bitcoin and cryptos. I literally show you exactly how to compare the two. So it's very interesting. So that is it for the table of contents. All right, so let's dig in. Let's officially start. So chart your course, unraveling crypto trends like the flow of a river. So at the very heart, the core of this trend trading systems, there's two key moving averages that are so focused and centered around this system. And by the way, I won't go into all the detail of how I came to moving averages in terms of why they are included, but more importantly, out of all of the moving averages and different time frames, et cetera, there are two in particular. Not only that, but in terms of the periods or the time frames, I will share with you precisely what those are and why in their use cases. But technically speaking, and I'm not too technical in this video. I try to keep it somewhat high level, but moving averages, these are technical indicators used in trading to understand market information and make informed decisions. They track and evaluate the asset's performance over a specific period and smooth out price movement to get a clearer picture of the market trend. For example, in Bitcoin trading, moving averages, they can actually help us understand the volatility of the markets by smoothing out the price fluctuations. For those of you that are familiar with cryptocurrencies, there is a ton of volatility. And number three, or lastly, they can generate a buy and sell signal for us. So they help guide us for entries and exits. I dig in. I get very prescriptive in terms of how these moving averages work, what to look for both buy and sell. Stick around and here in a few minutes, I'll share that with you. So I'm somewhat bouncing around a little bit, but that is by design. So we were just talking about moving averages, but now I want to jump into the tech stack just real quick. because this is going to be a big part for the content, for the discussion, for the duration of this video. The big part of our tech stack is TradingView. So utilizing TradingView for chart analysis. So TradingView is one of many platforms out there, by the way. Probably have tried 5 or 6, but I really enjoy TradingView for so many different reasons. But these are 4 at a very high level in terms of why I like this. By the way, I'm not getting paid by TradingView. There's no sponsorship. There's nothing. I'm just a fan. So number 1, you get a bird's eye view with multiple charts. So you're going to know why I mentioned multiple charts, because I'm a big advocate of multiple time frame in trading cryptos. And number 2, their mobile app plus alerts. So in my opinion, this is a best-in-class mobile app. You can do basically everything on the mobile app that you can do on the desktop version. Plus, you can bring these alerts, which we're going to talk about, directly to your cell phone, so you don't have to be in front of your charts. So again, once you learn about what it is you're looking for in terms of entries and exits, the key thing is, if you are busy like me and most, you don't have to be in front of your charts. You can literally let that trade come to you. This is what's the beauty of this trend trading system. Literally, I've heard this for years and I never knew what this meant. But with these alerts, you literally can wait and be patient and bring these trades directly to you and your cell phone, regardless of what you are doing, because this mobile app, it is fantastic. It's literally just as good as the desktop. Speedometer gauges. I love these things, and I'll share with you what they are here in a few minutes. But at the core, these focus on momentum and moving averages. This aligns perfectly for the core part of our trend trading system, and I use these as a guidepost to pay attention. And again, I'll share with you what I mean by that. And then the data feeds. The amount of data feeds that TradingView has, you can get any asset, any ticker symbol, not any, but you can get most globally, and it's included in the monthly subscription. And by the way, I do not go into their fees, what that costs. There's tons of videos on that, or you can go directly to their website, but there is a free version. I think you can get up to 4 indicators, and I think you can also get maybe 3 or 5 alerts per se for free. And then on their next paid version, I want to say it's around 20, 25 US dollars a month. But the value that you get for that it's definitely worth it. So you remember how I said I was bouncing around a little bit. So now I'm going to go back to the moving averages, because again, we're going to talk a lot about TradingView here for the duration of the video. Let's go back to moving averages real quick, okay? So I want you to think about these 2 moving averages. Think of them as the ship and the jet ski, and let me explain. So first of all, the 2 moving averages that we are going to use is the simple moving average, so the SMA 50, and then we have the exponential moving average, so it's the 15 EMA. So we've got 2, SMA 50 and then the 15 EMA. So number 1, this really does. It helps you identify the trend. So the SMA 50 helps identify the overall long-term trend. And this is what I really love about it. It's so simple, and you're going to see here in a minute. But when the SMA 50 is green, that helps you identify that we are in a uptrend. And then when it's red, we are in a downtrend. And for this section of the video, I'm just going to talk high level, Twitter version, not go in depth, because there's some embedded videos that I have done that I go in depth on this. So again, for this, I'm just going to skim the surface. But this is what again, one more time, for the SMA 50, this is really cool. When you use this to identify the trend, whether it's up or down, and if it's up, it literally turns green on its own. You don't have to do any thinking. And then when it's a downtrend, it turns red. And I'll share with you what those use cases are. There's 2 primary use cases for that SMA 50. And by the way, for that SMA 50, think of it as this ship. It's a giant cruise liner, right? It moves extremely slow in comparison to a jet ski. Turn slow, stop slow, everything's just slow, but it's steady. And this will help us identify the overall trend. And the EMA 50 Think of this as a jet ski. Jet skis, they're fast. I haven't been on one in probably a decade, but I would imagine you can go from 0 to 60 in 4 or 5 seconds. And these guys can turn on a dime, they can go anywhere. We use the jet ski or the 15 EMA to help monitor price action. And then we use the 50 SMA to help us monitor the direction of the trend. But this is key. These two cannot be standalones. We have to use them together. So just remember that when you're watching these videos in your free time, okay? And then this is what's really cool. It's unbelievable, but these really do. They help us with entries and exits in terms of triggers. So combined, these can help us identify strong entries and exit features. And then number three, these are not entirely to be relied on, but they are a wonderful guidepost. And you'll see that we have other validations that we need to seek out, but these are the primary. So hopefully that was helpful on the two different moving averages. And if you could, when you start to dig in on these, just think about, again, the SMA 50 as this giant cruise liner. And then for the 15 EMA, just think of it as a jet ski. Moving averages start to finish. So just 20 seconds on this. So this is an embedded video, and this is done by TradingView. So there's a few embedded videos, either they're ones that I have done or they're directly from TradingView. I thought this would be relevant to try to keep the theme same and similar, but TradingView does a great video, and this is relatively pretty short, but this is a wonderful introductory into moving averages. Not really per se the SMA 50 or the 15 EMAs, but this will give you a really good overview of what they are and how they work. And this will really help you when you watch this next video. So this is the 15 EMA and the 50 SMA live in TradingView. And you can see this is me right there. So by the way, this is about a 12-minute video. And again, I'm live in TradingView. But just do me a favor. I did this probably 2 years ago, I think. And this is one of the very first videos I've ever done. And by the way, I was also sick. And you will see that in my voice. It's a little strained, but not the best video that I have done. However, the content, in my opinion, it really does explain how the 15 EMA and the 15 SMA work together. But more importantly, what you need to look for in terms of, say, entries and exits as an example. So I hope you enjoy that. And again, my voice is strained and it's one of my very first, so don't judge me on the overall editing skills per se, but the content's awesome. All right, speedometer gauges. And this is a feature of TradingView. There's three of them. You can see that. So over here on the left are the oscillators. So just think of RSI or MACD. And I think this speedometer uses around 10 or so. No, excuse me, 11. Excuse me. And then over here are the moving averages. And this uses 15 moving averages. There's EMAs, there's SMAs, and there's different time frames. Then this right here, the summary, this is an aggregate of the oscillators and the moving averages. This is what's really cool. They have different time frames going down to the 1 minute. But remember what I said at the top of the video? This trend trading system is for swing traders. So you would be using the 1 day, the weekly, and the monthly. The reason why this is highlighted the week, because this is just a still shot, a screenshot, but you can toggle back and forth. This is what I absolutely love is if you want to get a feel, a validation standpoint, if it's a good entry or exit based off of just say the moving averages as an example, all you have to do is look at this gauge right here, and then just click on the appropriate time frame. I don't want to get ahead of myself, but we are primarily trading on the 3-day and the weekly time frame. But it's also great to look at the monthly because this could either tell you how early or how late you are, as an example, for this move. So again, I love these gauges. So here's another video. This is called Candlesticks Tell a Story. And this video is done by TradingView. And if I remember right, this is literally 60 seconds. But this talks about just the basics, the high level, when candlesticks were created. By the way, they were created back in the 18th century by Japanese rice traders, and they are still a cornerstone for trading. So this is a 60-second video, and I thought about doing this myself, but TradingView just did a wonderful job. And by the way, I would say this, as you're learning this trend trading system, out of all the important things that you would need, I would say candlesticks might be lower on the list. And that may seem odd for some people if you're watching this that are experienced. And here's why. Is because when you see those videos, like that I do on the introduction of the 15 EMA and the 50 SMA, really all you're looking for is price action needs to be above. There's certain things that you look for in terms of an entry, as an example. In price action, I won't go into too much detail on this, but price action needs to be above both of those moving averages, the 15 EMA and the 50 SMA. That's really all you need to know in order to get started. But as you progress in your trading career, I would highly encourage you to learn about candlesticks and candlestick patterns because they really do. They really do tell a wonderful story for any chart that you look at. Set it and forget it. So again, this is TradingView. This is a short video, but when I say set it and forget it, those are the alerts that I was talking about that you can set, and they can come directly to your desktop and or your mobile phone. And I thought about doing a video on this, but you know what? This is a wonderful video. It's right to the point. It's short. It shows you how to set alerts, and you can do a variety of different of alerts. It's really unlimited. But this is the key thing is once you understand the overall setup and you have some confidence, you can try this in your paper trading. But then when you are ready and you're ready to use your money and you are busy, you can literally set these alerts, forget it, live your life, go about doing your thing. And when that trade is ready, it'll come to you. And how do you know? You will be alerted. And again, remember, the TradingView mobile app is amazing. I've seen a lot of different mobile apps for trading, and this thing is just rock solid. So again, you can bring the trade directly to you. How to add indicators to your chart. I think this is the last of the TradingView videos, but I thought this was warranted because the 15 EMA and the 50 SMA, as an example, those are indicators, right? This is a short, condensed, concise video that specifically tells you how to go find them and how to add them to your charts. And then they also include a few little shortcuts. So I wanted to include that so you have that. Let's talk a little bit about time frames now. This is key. I'm laughing because I have learned the financial hard way with cryptos. First of all, the benefits of 3-day and weekly timeframes. I could talk for days on this one. Just have faith in me when I say this. The daily time frame, forget it. And why is that? That's because with cryptocurrencies, it's so volatile that whenever you think you have a bottom, as an example, identified, the bottom falls out. And it's not like you take the stairs down, it's almost like you take the elevator down. So this is key. When you play the 3-day time frames or the weekly, this is not going to allow you to pick tops or bottoms, but this will allow you to play the middle. And in that video that I do, there's a couple. There's actually one coming up where I talk about some measured moves in terms of the profits that you will make. So here's the deal. The bad news is you're not going to be able to play tops or bottoms. You're not going to be able to pick a top or pick a bottom. However, when you play the middle on these time frames versus anything sub 24 hours, the profits are amazing. You could literally, again, be in a trade for weeks and months. And we're talking, it's so common to get 20%, 50%, a couple 100% in terms of profits on these larger time frames. But this is key. With the trend trading system, you will be able to find strong support and resistance. So hopefully that's helpful. And do me a favor, just have faith in me when I say this, because I have learned the hard way. And again, for the trend trading system that I'm sharing with you, primarily on the 3-day, but based off of your risk tolerance. And if you're nervous, skittish about trading on cryptocurrencies, weekly time frame. It's awesome. You can still make a ton of money and you're playing the middle, but you're also increasing your probabilities and reducing your risk at the same time. Let's talk a little bit about the DXY, the DXY, or the US dollar. So there's an inverse relationship between the DXY and Bitcoin, or cryptos, and this is due to a few factors. So first of all, Bitcoin is often seen as a hedge against inflation, which is when the value of currency decreases over time. So when the DXY, or the US dollar, is strong, it means that inflation is low, and this makes Bitcoin less attractive as a hedge against inflation, and therefore the price tends to go down. Now, 3 quick points, and then I'm going to go live into TradingView on this. So number 1, the DXY. Here's what I want you to do, and I'm going to show you here in a second, so just hear me out. So in TradingView, on a chart, you want to have the DXY overlaid with that SMA 50, and use the 3-day time frame, as we talked about, or the weekly, okay? And I'll share with you what I mean. So that's going to be on one chart, and then on another chart, you're going to have Bitcoin and the SMA 50, regardless of the time frame that you use. So if you're going to use the 3-day on the DXY, use the 3-day on the Bitcoin. If you're going to use the weekly on the DXY, use the weekly on the 50, okay? So now let me just hop in and I'll share with you what I mean in TradingView.